Hello, everyone. Welcome, welcome, welcome. We are so happy to have you here today. We have a really special guest, and part of her team are here. And I did want to let you know once again that the Nest Egg Builder had Build Your Nest Egg book, Discover the Magic of Money and Investing, is now available on Amazon for $20. It's a great book. I just got a great feedback from one of the people who has received the book and has really found that it was easy to read, talked about things that most parents never teach their children, which is most of us. We had to learn after we became adults instead of being millionaires by the time we're 30, which is what this book will do. We'll have you talk to your children about how to be millionaires by the time you're 30, because they teach you how to use money and make it build and compound it over and over and over. So be sure to go to Amazon and buy Build Your Nest Egg. Thank you very much. And as you know, we work with syndicators and as a passive investors who want to build their portfolio and build it faster and better by working with people that are tried and true and have great experience. So today we have this wonderful team who came on, and Raina Mike, which I think is just the cutest name. Raina Mike is the CEO and founder of Love Apartment and Capital Investments. Hang on one second. In 2004, she started a European wholesale real estate and mortgage division, opened in offices in the UK and Bulgaria, and capitalized on the booming emerging real estate market in Bulgaria. So it's not always we have international people working with us, so that's exciting. And between 2017 and 2019, she built a portfolio of 500 plus add value multifamily units valued at over 20 million. And in 2020, her firm acquired three major developments and redevelopment projects totaling over 750 units, including retail and community assets. So that means she's real close to about 1,000, more than 1,000 units. Raina's strength lies in sourcing off-market opportunities, driving equity appreciation, and executing in emerging markets. And as we know, when we are looking for add value properties and off-market properties, everything is an emerging market, no matter what the market is. She holds, are you ready for this? A dual JD and MBA from UCLA, graduating summa cum laude. Congratulations. That's just so amazing. So may I present to you Raina Mike. Please take it away.
Good afternoon, everyone. I'm really excited to be with all of you. Peggy and I have connected recently, and I think that's going to be the beginning of a very long and productive relationship. And it is very near and dear to my heart, investments, and all of you are here because of that, because we want to grow our portfolio and learn more every day and enhance what we've been doing for a decade or for 1 year, depending on when you started. And it's never too late to start. And I'm gonna piggyback on Peggy's statement that every value add opportunity is in an emerging market, especially when it is a true value add. It's a brilliant statement what Peggy just said, and I could not agree with it more. But to look at the 2024, give you just a brief summary of the emerging markets across the country, and where our interest lays is the state of Tennessee, is Knoxville and Chattanooga. We have a station in Memphis, Tennessee, and Knoxville and Chattanooga are very close to us, several-hour drive, very quick flight of a 40-minute flight. And we are very focused on those markets. In Knoxville and Chattanooga, the occupancy in 2024 has been firm 96%, which is very, very attractive. And we have a very high price per unit, unfortunately. So we probably are not going to acquire anything in 2025 in Knoxville, but just to give you an idea, is $270,000 per unit. So it's a very attractive market, but with a high entry level. The average entry level per unit national is 193,000. So Knoxville holds up there. In Chattanooga, not so much. We've looked in Chattanooga. We're negotiating several deals right now. We're not going to talk about deals. This is strictly education, but those two markets are extremely attractive. Our third emerging market I want to mention to you is North Central Florida. If you picture Florida's map, this is the area between Orlando and Jacksonville. We've been watching that market. It was very, very hot 2 years ago. We are slowly but surely reaching where we can enter that market in Jacksonville, particularly. We have a very solid connections on the ground in Jacksonville. And that's Palm Coast as well, Daytona Beach, Ocala, and Gainesville, Florida. And the price per unit is quite okay because it's below the national average at about 186,000 per unit. As a reminder, national average is 193,000 and some change. So that's a very, very high on our radar market is Jacksonville, Florida, and anywhere in that area between Orlando and Jacksonville. The next emerging market we have our eyes on is Central East Texas. That's been on the emerging market for the last 3 years. We have negotiated quite a few deals. We did not reach agreements, but we are very, very active in that market. That's Dallas-Fort Worth, between Dallas and Austin, Texas, which includes Waco, College Station, and Temple. And again, occupancy is very high. It's 93%, but steady. Steady 93%. And average price per unit is very nice entry level at 132,000, which is very attractive for a lot of investors. And that's why the competition is very fierce there. Quite a bit lower than the national average, again, of 193,000. The next emerging market we have our eye on is Columbus, Georgia, which is the second most populous city outside of Atlanta. It's only 110 little miles northeast of Atlanta. The occupancy of that market is amazing. It's a steady 95%, very high demand for housing, and hold on to your hats. The price per unit is unbelievable, 81,000 per unit, which is less than half of the national average. So those are quickly going over. I know Peggy wants us to do 20 minutes, so we're going to try to really honor that. Those are our 5, and we are currently looking at Augusta, Georgia, which is the third most populous city in Georgia. Also very, very, very good market at 95% occupancy and average per unit below 100,000, also very attractive. So that is on the emerging markets. I'll take all the questions after that you might have, and I'm going to turn the floor over to Tyler to tell us about how to tokenize our portfolios for additional cash flow.
Yeah, thanks, Raina.
Thank you, Tyler.
Yeah, absolutely. I don't know how many folks have heard of real estate tokenization, but I don't want to get lost in the nomenclature and kind of buzzwords of it. But if you haven't heard of it, you will, because it is the evolution of real estate investment. And the best way to think about it and look at it is in the very near future here, shares of private placement real estate, like what you all invest in, if you are going to invest with RENA or real estate syndication projects, those are private placements and you get your share of that. Or if if it's in an LLC, they're LLC membership units. Well, imagine getting those limited investor units, getting your ownership share, and you could buy, sell, and trade those just like stocks do in the stock market. So what I'm talking about is, let's say you make a $300,000 investment in a project. You're in it for maybe a year or two. You make some nice profits. And then somebody like RENA has another project that you'd like to invest in. I'm saying you can sell those shares, those units in part or whole. Let's say in this example, you harvest the profits or take half of that original investment. You can sell it, ideally for a profit, right? That's why we're all in this, is to make money. And I know that's what RENA's projects are in it to do. And now you could say sell 150 or 200,000 of that to another investor on a marketplace and get those funds and invest them into another project. Or maybe you have a life situation. But the point is to make real estate liquid, to add a liquidity component to real estate that it historically hasn't had. And that just doesn't seem fair as a real estate investor myself, right? Once we invest, kind of the downside of real estate, we all love real estate, and trust me, nobody more than myself. It's a good, solid, real world asset. It's proven. Typically you get strong cash flows and tax benefits, and it's a wealth builder. It's a staple of a wealth builder. But one of the downsides is it's pretty illiquid. Once you're in it, you're locked in it, and that might be 3 years, 5 years, 7 years, 10 years. I've heard of 20 years or more. But in the very near future, like this year, let's say you invest in a project. I'm just going to keep using RENA as an example since we're all here. Let's say you invest in a project of hers, and then 12 months later you'd like to reinvest that. You will actually be able to settle that just like the stock market. So I think that is a pretty cool evolution to have the liquidity that we haven't been able to have before. And the nice thing about that is when you use a platform like, let's say, RE Tokens, because we're here, you're actually able to sign on and see your investment and control your limited partner shares and buy, sell, and trade those on your own accord. And that just really hasn't been the case in syndication. And so if you want to talk about the ability to diversify, wow, that really adds an additional component to these type of investments. Not only the ability to have liquidity much sooner, whether that's diversifying or harvesting profits, but you can actually see and possess your investments yourself, which is awesome. So I can share just a little bit here on what we've got. I'm going to just show a quick diagram to you guys. And going to just show you a couple of things here. Now, this is something that I normally talk to real estate syndicators about, and I show real estate syndicators how this can enhance what they're doing, because we don't want to fundamentally change what somebody's doing. I mean, real estate is successful for a reason. People like RENA are successful for a reason. So we're not trying to totally change and disrupt everything, but in this age of technology, we certainly can advance these things. In this age of electronic trading and liquidity, why shouldn't real estate be able to participate in that as well? So things that we talk to syndicators about is, what would scaling your real estate business look like if accredited investors from around the world could access and invest in your project online 24/7, 365? So there's a marketplace like RE Tokens, where you could visit one of Raina's projects, and she, in this hypothetical example, she would have a unique link to her project, let's just say, and you would actually be able to go in and see everything that you wanted to about that project. You can actually ask questions with a AI assistant on there that is trained on the deal and can tell you all the, specialties and legalities about it. But then you could actually go through accreditation and invest right there online on your own time, by your own accord. So that's pretty neat to be able to have that kind of access as an investor to invest in that. And what happens is once you're approved into a project, instead of just getting a subscription document, which is normally what we get as limited partners, we actually have an account. And we actually, because the ownership is now digital, that's what tokenization is it's just taking those LLC membership units, or you could call them shares, and adding a digital component to it, just like, stocks have a lot of times. And so now you have this digital ownership component that you can actually own and hold in custody, something almost tangible, if you will, which is pretty neat. And so the second bullet point here is once you have that, right, after, if you first invest in a project, it's normally a 12-month lockup period before you can trade shareholder to shareholder. But after 12 months, you can actually go to a marketplace like RE Tokens, and you can trade these shareholder to shareholder. What I like as somebody that has kids is if I wanted to, trade with my kids, I can do that with tokenization. I'm not going to go to the marketplace probably, but because I have this digital ownership and this custody and control, I can now move my ownership units around much easier. In fact, in an estate planning, I could give some to Charity and some to Johnny and Susie and some to Oscar and keep some for myself, right? And that type of flexibility is just unprecedented. But let's say, as I mentioned earlier, there's a life event, or you want to invest in the next project available, or you just want to diversify. Let's say you were in more of an aggressive capital building deal, and it's time to just get into something that's, maybe less of an equity growth, but more of a cash flow. You can easily get into the marketplace and trade those tokens. So you can have liquidity. I talk to general partners all the time. Since I only do real estate investment, that's my career other than RE Tokens. There's sometimes I want to take larger pieces of that capital and take my family on a trip around the world, or do something like that. And normally there's hesitation in investing in some of these real estate syndications, or maybe you don't write as big of a check up front because it's like, well, it's kind of trapped in there for a while. But what's cool about the tokenization is you can feel comfortable writing that bigger check into the investment, so that money's working, so it's making money for you. And then if you need it a year, 2, 3, whatever it is down the road, it's now liquid with the tokenization, and you can go harvest that and just sell the amount that you want to sell, right? So that's a liquidity component to real estate that's not existed, and that unlocks the equity. Right? If you do a lot of syndication investment, a lot of these limited partner type of investments, you're really locked into those. And so that needs to change, like these other asset classes. You need to be able to access your money when you want to access it. And that's a whole new dynamic that's very cool. And then we talked to them about the platform, which I've mentioned a couple of times, where you guys as LPs will be given an account, and you can literally see your investment, and with a couple clicks of the button can go enter that secondary marketplace. I'll really blow your hair back with this. It's coming. It's not here yet, but probably in the beginning of 2026, you'll actually be able to get loans against those LP shares, those private shares of real estate.
That's one of the coolest things, Tyler.
It sure is. We love
Yeah,
smart leverage in real estate.
yeah.
Absolutely. And you can't really do that now. I mean, I suppose you could go to your bank and if you're in private banking, get some type of portfolio loans and different things like that. But the reality of it is it's normally not a liquidity pathway. But what they do is because they're in a digital form, a token form, you can put those up as collateral and get good terms because they have strong collateral and access liquidity same day. So that's one more advantage that's coming around the corner. So now when you're considering, should I invest in this real estate syndication and how much, should I write? What if I need the money back? Because I know I normally tell my investors, if you're going to need the money within the next 5 years, don't do this investment. That's what I've had to say in the past because, they're just not that liquid. But
Mhm.
now, as mentioned, you can have the confidence to be able to get into it, get your money working, make bigger investments. Because if you need to change later, you have that ability, or a new investment comes up and you don't want to sell and create a taxable event. In the near future, you'll actually be able to get a loan against those tokens and you don't jeopardize the title of the property at all. You don't go through the bank as a traditional method with a lien on the property at all because the property itself in total is not the collateral. It's your private shares that you own, your tokens that you own, that you invested in. So it's a whole new level of control for
Game
LPs.
changer. It's a game changer.
Yeah, absolute game changer. And so this is all able to be done on your platform online. And like I mentioned, there's even AI is kind of the hottest buzz around. So it's going to be in everything we do every day.
Mm.
And we specially train an AI assistant. We call it a Token Genius AI on the deal that you're looking at. So if you're up late at night or really early in the morning and you're interested in investing in a deal, but you have questions, you're not sure, you can get those all answered right there. Of course, as any time, if you have a legal question, then a licensed attorney, or if you have a tax question, a licensed CPA is ultimately the source of truth. But sometimes it's nice to be able to get a good, quick, simple answer to give you some of that information or that confidence that you're looking for. And oops, I took away my screen there. Sorry about that. Um, so we talked a little bit about this. I probably should have flashed over to this screen, but what does it mean to tokenize real estate? And it's just simply this. It's digital ownership. We put it on the blockchain. If you've heard about what the blockchain is, you don't need to know what it is. That would be like needing to know what the internet is. We don't really need to know what the internet is or does. We just need to know what it'll do for us. Like
You
what
mean Al
website.
Gore invented the internet? We already know that. Ha ha
Yeah, yeah, you got it, you got it. So it's that digital component that goes to the ownership, and we call them tokens when we give it that digital ownership. Still have all the same, legal rights. In fact, more so because the blockchain proves that you're the owner. In fact, from a safety and security standpoint, it proves who's the owner is, what kind of debt is on there. You can see who owns what. And if something ever happened, like your computer got hacked or something weird, this is not crypto where, oh no, you lose your money. That doesn't happen here. These are securities. Make no mistake, these are securities. In fact, RE tokens is regulated by the SEC. It's a regulated SEC platform. But we can restore if something happened and somebody got in and stole your tokens, let's say, that would be most likely happening from them hacking your computer, which anybody is potentially vulnerable to. We can actually burn those tokens, render them worthless, and reissue the proper owner new tokens. And so it's a fantastic safety feature that's built in. And kind of one analogy I like to use to explain tokenization is if we think of real estate as a really large gold brick, just a big, huge gold brick. Well, it's kind of hard to, get a a lot of folks involved in that. And it's certainly hard to kind of get out. There's a limited buyer pool if it's just one big, thing, right? And if normally if it's sold, everybody has to sell, or if you bring debt against it, everybody has to play. It's kind of cumbersome, right? But imagine taking that gold brick and turning it into 10 million gold coins. And now you have your share of those gold coins and can do what you want with them. And that gives a lot of power to the investors. So kind of a fantastic deal. Just to give you a little bit of an idea how this works, you're kind of seeing under the hood from the syndicator side or the issuer side, but I think it's good to know, because if you're going to invest with these folks like Raina, you want to be able to know what kind of processes are involved, at least in the platform that you may be using. So they set these things up. The legal documents are critical, just like they are today, right? The securities documents and packages. What's cool is you get to sign them all online, and they're always in your account right there, right next to your investment. As mentioned, you've got the Token Genius AI to ask any questions that you have. You do have to go through the normal processes for identity verification in these securities, which would be like what we call KYC, know your customer, or know your business. That's if you want to invest with an LLC, it's know your business. And that's just an identity verification. And then on accredited deals, you go through accreditation. But again, it's all right there, all in one platform. So then you're able to invest, and then you're onboarded, and you can get your tokens distributed to you. So there's kind of just a couple of flashing in the picture there, things. I didn't bring a deck directed towards limited partners because I don't want to get caught up in, as cool as some of these advantages and enhancements to the deal are with technology, realistically it's still a fundamental real estate deal and a fundamental real estate investment underneath. If it was a bad real estate deal, it's still going to be a bad real estate deal. This isn't going to help you, right? So make sure that as always, the number one thing is, who are you investing with, right? It's always that. And so you want to find somebody that's proven, and I'll just use Raina again as an example since she's present here, and I've seen that resume. So, but it is a very nice enhancement to what you're doing. And I'll finish just with a story of a professional limited partner. This gentleman, I kid you not, when we were talking and he approached us, he goes, "Oh my gosh, tokenization. I've been waiting for this. You guys, a secondary market, a regulated secondary market. Oh my goodness, that's so exciting." He goes, "Because I get 60 K1s a year." And those of you that are LPs and invest in these deals know what a K1 is and know what that means. It means he's invested in 60 different syndications. And as fantastic as that is from a wealth building perspective, right? That's why we do what we do. Yep. He really would love to be able to access some of that liquidity. So he says, like, I got millions of dollars invested, but I can't really access it. I can't get to it. It's not liquid. Well, he wants all of his issuers, his syndicators, to tokenize so that all of those can be traded in a secondary marketplace and he can access those. You know, the other benefit I know he's thinking about is accredited investors who invest up front in what we call the primary offering. There's always going to be a little more meat on the bone, right? There's always a little bit more profit because
yes,
you got it. You got it. We need a certain type of return as an accredited investor. But when you go to the secondary market, non-accredited investors can purchase these from you as a LP. So school teachers, firefighters, as mentioned, your kids, your neighbor, your cousin.
$5,000, $10,000 worth. However, there is no lowest limit or the highest limit, correct?
Yeah, you can set that. I mean, right now, $1,000 minimum, I think is what's on there. But yeah,
Yeah.
extremely low, compared to most. But when you sell that to a non-accredited investor, they are willing to pay more for it or get a lower return. We know how that works, right? The cap rates go down because the prices go up, right? So if you're at, I'm just going to throw some numbers out there. If you're at a 8% return, right, at a value, you could, and you sell at a 5% return, right? They're getting a 5% return because the
You're making the
value,
margin.
the margin, that's right. Your token went up and now they can participate and they can buy at 5%. Well, why would they buy at 5% when you weren't interested unless it was 8%? And the reason is because school teachers, firefighters, police officers, and the server at your favorite restaurant does not normally have access to high quality real estate deals like what Raina does. Because in the beginning, she has to sell, to accredited most of the time. That's what these securities are about. And if you go ask them, hey, would you be interested in investing in this apartment building over here? You'll get about a 5% return, but you'll get the tax benefits. And as they increase the value of this building over time, the value of your token will go up. Your cash flow will go up. And guess what? In this inflationary environment that we had over the last 7 or so years, that is very likely to be the future of our world, those folks that weren't able to access that got pushed down. They got absolutely destroyed by inflation, right?
That's right.
But
That's right.
now they're able to get involved with this, and in an inflationary environment, they benefit. One last example, and then I'll wrap it here. Imagine the tenants themselves being able to actually invest in the apartment building that they
Tenants
live in.
become owners, and owners look after your buildings with a lot higher care than a tenant. Correct.
Yeah, you got it, Raina. Think of that mentality now of those folks that are living there. And not only that, when we do the rent raises, say every 12 months or so, because that's what we're in the business of doing, instead of them just being completely disgruntled, guess what? They catch a piece of that.
They're going to be making more money on their $1,000 token or $5,000 token, whatever token they have purchased. Yes.
Yeah.
Okay,
Yeah, you
good. So
got it.
this brings up a half a dozen at least questions.
That's wonderful. Let's go for questions. Thank you, Tyler. That was amazing.
Yes.
Does anyone have any questions besides me? I know once I start asking questions, lots of people do. Okay, so yes, Ted.
I'll follow you if you want, but I do have some questions before they quit.
Oh, go right ahead. Start.
Okay, how do you differentiate this activity from something that I'm familiar with in the case, let's say, we're very familiar with, and it's either REITs or mutual funds?
Mm-hmm. Yeah, it's a good question. This is real ownership, direct ownership in real estate, to where a REIT or a mutual fund is just ownership in a fund. For example, most REITs and certainly mutual funds, you're not going to get a K1. You're not going to participate in the actual ownership, that, the tax benefits, depreciation, amortization, and things like that. And in a REIT, they're a large fund, and they're going to go and kind of move assets in and out. There's all sorts of rules surrounding how a REIT needs to operate, but it's indirect exposure because you're investing in a fund or a company, really, and that company just happens to own real estate. You're not going to directly participate, like I said, in the tax ownership. You don't really, it's very difficult to pick and choose what type of buildings or what area or what asset class
Impossible
you would want
to pick and choose even.
That's right. Yeah. But in a syndication, let's just say Raina's doing a 200 unit apartment complex, in Nashville or something like that, and you've got the numbers on that particular building, you like Nashville, you'd love to take a trip there and write it off anyway, all of those particular benefits, it's very easy for you to make a decision on that apartment building that somebody else is going to operate and do all that. And you're a real owner in that property. You have real ownership. So you're going to be directly tied to all of the ownership components, the equity appreciation, the cash flow, and the tax benefits. So that's one major difference between tokenization and ownership in this direct fashion versus just investing in a company that happens to own a mix of a real estate portfolio.
Does that answer your
Yes, I'm-
question, Ted?
I'm still not completely clear what
Well,
this
let
is.
me explain it to you.
how this
Really
different.
so let me tell you in simple terms. This is, you own real estate. You're a LP, you're a limited partner investor in real estate, period. It's not a stock. REITs are stock.
Yes.
So you have a K1 when you're an owner of real estate. You do not get that when you're in a stock.
Yes.
That's the only difference.
So what's the difference between tokens and just a plain old
The
limited partner
token,
interest?
allows people to buy or sell into ownership.
And a lower entry level, Ted.
Well, not necessarily.
Right, right. But
No,
practically.
don't confuse Ted. Stay on what he wants to know, please.
Okay. You know him very well.
Yeah, no, it's ownership. When you're in stock, you don't own anything.
Yeah.
When you own the right to buy or sell the stock that you bought. But when you're in ownership in real estate, the way it's set up now, you're in it for whatever length of time the GP team sets up. So 5 years, let's say. So you get your K1s for 5 years. You don't get that in stock. In stock, you can sell anytime you want.
That's right.
And there's no tax advantage in the stock market. Well, there might
So
be
are
if
you just modifying the rules around limited partnership ownership?
No, we're playing
No.
by the current rules. We're just enhancing what a real estate limited partnership offers. Real estate limited partnerships have all of their established benefits, and now we're just adding components as explained, like a liquidity component. We're just enhancing what is already an excellent practice of real estate limited partnerships.
So, Ted, you could own a house and you could sell part of your house to somebody without moving out of your house.
Yes.
And let's say you sell 5% of your house to, I don't know, let's say one of your kids. They don't have the right to live there. You didn't give them that right, but you gave them the right to ownership. Now they have 5% of your home because they gave you that cash for it. So now they're on title with you because they are now a partial owner of your property. That's the difference.
Is this still just an interest in a single property?
An LLC, yes.
Yes.
Yeah, they can't do this I don't think they can do this out of a fund, but we'll have to check.
Yeah, you definitely can. What we tokenize right now is it very often is a single property like an apartment building, or sometimes folks will tokenize a portfolio of apartments that they have. Let's say they have, 3 or 4 different apartment
Don't
buildings in the
confuse
Sun Belt.
them. Does that answer your question, Ted?
For now,
Okie dokie. Thank you, Ted. So I want to know, all I see is this is a nightmare for the GP team. Because if I own, let's just say I decide to sell half of my investment to 6 people, now the GP team has to come up with 6 more K1s and split all of that out. And then my share will be changed also. How's that being dealt with?
Yeah, I think that's the beauty of this is it's actually much easier. In fact, it's easier to take in hundreds or thousands of investors because technology handles all of that. The way it works is the entity, the LLC, and the GP is going to do a tax return, right? That's what we do now. We do a tax return. That's same
Right.
thing. And that tax return produces data. We call it K1. Well, what happens now is when you do that tax return and you have that K1 data, it's put into the software and electronically disperses all the K1s to the owners in a pro rata fashion of how many days of that year they owned it. So technology handles that problem and automates it.
I love AI. Isn't that wonderful?
Yeah.
Isn't it wonderful? I'm in love with AI. I think I would marry it. No, just kidding.
Is there a reason that this is 506C, that it's only accredited investor and not 506B? What difference does it make?
Yeah, you can do both. But if you want to market to the world, which is a big part of what we do, then you're going to need a 506C or Reg A plus tier 2. But we can do 506B as well.
But we definitely want to market to a larger
Okay.
audience.
Yeah.
Yeah.
Right, you want to market to a bigger audience here.
Right.
You gotta be AC.
Mhm.
Okay, and then so you have this all set up to automate. We don't like that. We want the GP team. We want to know how the GP team's qualified. And we want to see what they've owned. We want to see their numbers. We want to know what they've done in the past. We want to run background checks on them. Do you do
Mhm.
that?
Absolutely. We're an SEC registered broker dealer, so full SEC compliance and everything has to be done. So it's quite the opposite of how it is done now, to where the compliance is part of that automation. So you can't even, these are securities, you can't even sell them, or we can't, unless all of that information is available to potential investors for their due diligence. And we have to do separate due diligence reports as a broker dealer as well.
What does that mean separate? Separate on what?
Yeah, so before we would
first?
ever list anything on the marketplace, it's our legal compliant duty to go verify all of the GP sponsors, to verify financials, to verify title, to verify the truth behind all of the information that they put forward, because we're required to help protect the investors. That's our job.
Yeah, that's a super important part. And then these people get to actually meet the GP team?
I would say they're just as accessible as they would be now. Some GPs make themselves extremely accessible. Some you're going to talk to their team. It's no different. We're just enhancing what's already done. So how somebody typically runs their business is how they will run it, moving forward with just some of these extra tools. So I think most GPs will make themselves, available to folks that are investing with them, though. And
we make ourselves extremely available. We're very easily approachable.
Yeah, you are. That doesn't make everybody approachable. Trust me. I've worked with many syndicators. So my other first thing that came up was, how is this set up so that I am secured in the LLC? And how is that token attached? So am I investing through the token?
Yeah, what a great question. So how are you secured today? The only way you're secured today is a subscription agreement.
Right.
That's it.
Yeah.
That's it.
Well, the PPM is just a disclosure. So all you have is a subscription agreement. Well, with tokenization, not only do you have the subscription agreement, but because we've made the ownership digital, you actually can custody or have our third-party company custody your ownership. There's a tangible factor that goes beyond. These are certain, we'll call them serial numbers, that prove that you are the owner, that you own these beyond just the subscription agreement. And it's recorded to something called the blockchain, which is immutable, meaning it's not hackable or changeable.
So it's an additional level of security, Peggy.
Okay,
Yep.
are there fees for this?
Well, we don't charge as a platform. So this is where the issuer or the syndicator is different from the platform. I can only speak for myself as a platform, do not charge any fees for the investor to invest. There's typically like a $40 accreditation fee to go get accredited or whatever online, but there's no fees to the investor from us. When you trade on the secondary marketplace, there's about 0.5% of a fee for what you sell as an investor.
And who does that go to? That 0.5%?
That would be us as a platform.
Okay.
Yeah.
So if you're already an accredited investor and you're already certified, you still have to go through that process?
So I was talking about this. No, you don't on a secondary market. Non-accredited can buy on a secondary market,
No,
so
I'm
you
talking
don't have
about
to
the
do.
original. I mean, I've been.
Sure. Well, to be compliant, this is again a legal issuer deal. If they are going to accept your accreditation, however that was done, because there's parameters on what is acceptable accreditation, then no, you wouldn't have to go through that. If you have something that your CPA wrote up 5 years ago, or you just printing off a bank statement or something, you probably go through more of a formal accreditation process because we need to make sure these deals are compliant. These are securities that are run under exemptions. And if you let a non-accredited investor into one of these exemptions, you lose your entire safe harbor. It's all about protecting the people involved. And so we need to make sure that indeed, if it's an accredited, like a 506C, that we have to confirm that it is accredited investors going in there. Otherwise, we could jeopardize all sorts of things, and that's not a risk we're willing to take.
Okay, understood. So I want to sell a part of my whatever I have, and I'm selling it to a non-accredited investor. What do they have to go through?
Just KYC.
Okay.
Yeah, your deal needs to be compliant with Rule 144 because that's how we list it and sell it. But the investor themselves, that all they got to do is create an account on the platform and go through KYC.
Okay. He's great. And then Terena, when you were talking about all these different areas that you like and the why you are attracted to the prices, I only care about capital return. So something in Colombia for 81K tells you that the income there is very low. And you have to go by this. Just because it's 81 doesn't mean it's affordable to those who are living in it. And my biggest concern right now with syndicators is they think they can go in, make a property nicer, fix it up, and then raise the rents. But if the people can't afford the raised rent, then all the investors have been put at risk.
I totally agree with you. I could not agree with you more. We are not those type of investors where we're going to look to raise the rents with $100, $200, $300, what brokers are suggesting today, which is very wrong. To us, that's very wrong. That is just leading the investor community into a wrong direction. If you're talking $50, yes, the population can afford most likely $50 to $75, but they're talking several $100s.
Right, they are.
Yes.
I just looked at a property I've invested in and been able to raise the rents $15, and this is in Texas. That's it.
Right.
That's all they could raise the rents, $15.
Right.
You know how long
Right.
it takes before you can get to 100 or 200?
Right. How many raises it's going to take?
Yeah, but
7?
yeah. So when somebody goes in, they could say they could raise the rent $300, and then you say, well, nobody can afford that. Oh, we'll do that over years. Well, you didn't put that in your
You
executive
didn't
plan.
put that. I
You
have
need to
very
put it
red
in your
flags when I
executive
see
plan.
that. I
Right.
agree with you 1000%. My
Which is
red
why
flags go up.
Yeah, that's why you're not getting the returns you thought you were going to get
That's right.
because of that. That's really all the. really, really, really like this token idea. I have not heard of it before. I know
I am
people
so
are
glad we
talking about it.
presented it. I'm so glad.
I'm concerned about differentiation, which is what you hear in the stock market where they split up the stock into a
Yeah.
million pieces. And that's not really what's happening here. So,
Yeah, you're
so-
right. It's not a stock. They're whole
Not.
units of real estate
right.
ownership. They don't
And
get split up like that.
and
Yes.
everybody's secured by the real estate. So somebody like Christina, who's not yet accredited, could come in because she is saving her money. She does want to get there. Now, this is a great opportunity for her to get into something. So
Absolutely.
I really like this idea. This is really good.
That's why I did it in the first place, Peggy, is it evens the
That's right.
playing field for those that don't normally have access.
That's
Okay.
opening the doors wider than what they are today.
Yeah, that's great. We need something like this needs to be done. So Ted and then
That's-
Chris
Yeah.
DeSalle.
Who does the bookkeeping for the secondary market exchange?
Yeah, so we're gonna get a little technical here. So strap your seatbelt on. There's something called a transfer agent that because these are ownership units and securities, in real time, the ownership needs to be tracked, and that's done by an SEC regulated body called a transfer agent. And they keep something called a cap table. And the cap table tells you exactly who owns what, and it captures that data in real time.
And then who does the
Saying
bookkeeping?
that's not the responsibility of the general partner on the project?
Sure it is.
Yeah, it is always going to be their responsibility, but us as a platform, it's also part of our compliance. And then to answer your question, who does it? The CPA. Think about how they normally get their data, right? Now this is just a really a better way to do it where it is not immutable. So whatever data that the CPA normally uses to do a tax return, they're still going to use it. So if you use a property management software, like that's what I do, I use a property management
Always.
software, and at the end of the year, I have all the income and expense information, and that's what they do that with. But to do the K1s, or who owns it and who gets what share of let's just say tax benefit like depreciation, that's what that cap table is. It shows the ownership in real time. And as a SEC registered body, both us and the transfer agent, that those details, it's required from a compliance level for those details to be kept. In fact, issuers like, say, Raina, the syndicator, she always has access to that on her platform. And really, frankly, something cool about this blockchain thing is it's public information. So you can actually go to the blockchain. It doesn't say somebody's name and information. There's just a number, like a wallet address, but you can see, who owns what and how long they owned it and what's going on there. So it's a whole new level of transparency in these deals that hasn't existed. In fact, you'll be able to see on there if they've had insurance claims against the property, how much debt is there. So it's much safer as an investor. You can actually see and trust the information that you're able to see versus just getting it from a GP team, right? You're
Right.
able to verify that information.
I'm gonna have to think
It
about.
sounds like you're saying
everyone.
that the tracking of ownership is being outsourced the same way payroll processing is being outsourced today.
It's all going to be different, Ted. We've got AI in place. AI is going to be doing everything. People are not going to be doing that. People like Raina will have to double check everything and make sure
Yes.
it's right. Or she'll have her bookkeeper or her CPA double check and make sure it's correct because that's what they get paid for. But we're not going to be seeing human beings doing this anymore. It's almost gone. You just need somebody to double check, and that's why you have a bookkeeper. Your bookkeeper's
right.
double check to make sure it's right, and they probably will only have to update it quarterly. We're in a new world, Ted. We are in a new
In a
world.
new world. And it's a beautiful world to be alive in.
Thank God for
It
AI.
is, thank God, it is a beautiful world.
Yep.
Thank God.
Yeah, the goal at the end of the day is to make all the information much more accessible and much simpler. So we got really technical and even kind of complicated today, but the reality of it is it's very easy to see, access, read, and due to the technology underneath it, it's like blockchain, it's immutable, meaning it's a trustless system. I won't get into all of that, but the point is that's you know, they're much more foundational than the trust systems we have today, right?
Yep.
I would use 3 words, ladies and gentlemen. Liquidity. Tokenization provides liquidity, extra liquidity. Easy access for non-accredited investors. Security and transparency.
Thank you. Let's go to Chris. Do you have a comment or a thought or a question? You're an expert in.
Yeah, no, this is great. Good learning. I knew a little bit about that, but not as much as I learned today.
Okay, maybe we
We're
should
so
set up
glad.
a conversation with you and Tyler or Ricardo.
Yeah,
Yeah.
yeah, we should do that.
Oh, and that gentleman who just left. So I guess we won't ask him if he's got a question or comment. Well, I think that's it, but I tell you one more thing that pops up to me is 1031. We work with 1031 people all the time, and I wonder how this would help somebody avoid 1031 capital gain taxes. Because if I'm selling part of my LP position, I could be in a position of I'd rather have it be borrowed. I'd rather be lending the money, I don't know. We'll have to have another conversation about that. Do you deal with that in any way?
Well, I'm certainly familiar with, 1031 tax deferred exchange and how that works. Because these are LLC membership units and it's not like kind. So today, under the current old school rules and everything, you're not going to get the tax deferred exchange going from token to token. However, in the near future, instead of you will be able to do that. But how long it takes the IRS to be able to adopt and say you have an apartment token, you're going to trade for another apartment token or for an office token, it will be a while probably before the IRS catches
No,
up
that's
to
not the
that.
rule. The rule's real estate for real estate. You
I
don't,
understand.
doesn't
So
have
you tokenize the deeds, and so it'll be a fraction of the deed that goes. Yeah.
but they don't
My
have that set up
suspicion
yet.
is that it's going to be a good deal more complicated than IRS rules because because the rules on 1031 are statutory, and that's Congress.
Yeah, it's not IRS.
Yeah, most of what we're doing is not trying to change the rules as much as follow the rules. So what we just talked
Right.
about is LLCs, being tokenized. Well, once you tokenize the actual deed and you're talking deed for deed, that matches current 1031 tax. So it's made if it doesn't make it simpler, we're not going to do it, right?
Yeah,
Right.
exactly. Well, we'll have to test it.
Yeah, we've been there's billions and billions of dollars worth of tokenized real estate in the United States. We've got 35 million on platform now with another 75 million in the next 30 days. So if you start Googling around, BlackRock has $100 million tokenized fund. It's you'll hear it more and more every month as things move along. It's almost like we're sitting here and when we talk, say blockchain, it's 1992 and I'm saying, hey guys, there's this thing called the internet, pay attention.
And it's 2010 and there's a thing called crypto.
Right.
Right?
Exactly.
Exactly the same.
If there's no other questions, then we would love to hear more about this at another time. If you're interested to come back on our show
We
and
would love to.
talk
Very
about it.
revolutionary. We would love to, Tyler, right? And Ricardo.
Yeah, Raina. Yeah, just keep me in the loop. Would love to chat more about it. I love it. And the education is so important. I really appreciate the questions from everybody
Very,
today because it's
very.
so easy to, overcomplicate it. But like I said, underneath, it's just fundamental real estate. We're just adding some things to enhance it. But it's got to be fundamental real estate, fundamental rules, fundamental securities laws, and it starts right there.
Good.
Absolutely.
That's great. It was lovely to meet you all and see
So
you.
lovely to see you all and to meet all of you. Thank you so much for giving us this opportunity, Peggy. We
Thank you.
appreciate it so much.
Thank you for being here.
Take care, everybody.
Thank you for having us. Take care. Have a wonderful afternoon.